All right, so we are live, guys. We are live. Okay, so if you can see my screen and then you can hear my voice, make sure to use the chat box. Comment that you can see my screen and you can hear my voice. Comment, use the chat box. Let me know that you can see my screen and you can hear my voice. Comment. You're welcome, guys. And we are going to have an excellent session here tonight. We are going to have an excellent session here tonight. Comment that you can see my screen, you can hear my voice. Comment. Let's go, guys. Let's go. All right, Mr. Michael Odewumi said yes, he can see my screen and he can hear my voice. All right. So we scheduled to start for 8 p.m. So let's wait on for others to join. So we move. All right, I can see Mr. Patrick, I can see Olalekan, I can see Ayodele Latif, I can see Victor Owonifari, I can see Olajumoke Olalere. Perfect. Okay, so let's keep it coming, guys. Let's keep it coming. We are starting very soon. Okay, we are starting very soon. Let's keep it coming. All right, Mr. Sikiru, you're welcome. Mr. Ekunda Yomi Didi, you're welcome. Confirm that you can see my screen, you can hear my voice. Confirm. All right. So welcome, welcome. Yeah, I was away. I had to go and get something. I had to go and make my tea and then get prepared for the class. I hope you guys can hear me now. So let's give it some minutes so we can allow others to join. Okay, so we can allow others to join. I hope you can hear me now. Please confirm that you can now hear me. Please confirm now that you can hear me. I just posted the link on the group. All right. So we are now 33 in this group. All right. So I can see Imem, please confirm. Okay, yeah, Mrs. said now she okay, good, good. So all right. Olajumoke, please confirm that you can hear me, please. Confirm that you can hear me. So we are now 50 on this group. Obviously, I expect everybody to be here. We are over 300 registered for this master class. Over 300 people registered. Over 300 people registered for this master class. And here we have 50 people. So let's give it maybe like 3 more minutes. Or maybe you start 8:05 on the dot. So we give room for people that are not here. All right, Mr. Leo, you're welcome. I like your font size. I like your font style. I like the size. Looking so different and unique. I like that. All right, Mr. Thomas, you're welcome. Mr. Daniel Sakio, you're welcome. You're welcome. Mr. Guam, I don't know if I pronounce the name correctly. Is it Guam? Okay, Guam now or something. Okay, Mr. Yusuf, you're welcome. So, Rofiaro Moke, you're welcome. You're welcome. You're welcome. So we are now 61. So we are starting in the next 1 minute. Okay, so I think we have tried enough just to allow people to get in. All right, all right. So we are starting. We are starting now. We are starting now. All right. So good evening, everyone. Let me welcome you to this mastermind session. Okay. So a quick intro. Why the registration for this masterclass was actually going on. I got a series of questions from a lot of people. The idea around this is they want to know who is this Jami Fatimbo, who are you? So I was able to reply a few number of people because of my schedule and my timing. And unfortunately, I couldn't reply others. I'm so sorry if you asked me a question, I couldn't reply you because of my time. I'm trying to manage my time and at the same time I'm trying to be effective as possible as I could. Okay. So allow me to introduce myself to you without taking up our time. So my name is Jami Fatimbo and I'm a member of the Institute of Chartered Accountants of Nigeria, and also I belong to the Association of Accountancy Bodies of West Africa, popularly known as ICANN and ABWA. Okay, with over 12 years of hands-on professional experience in the realms of accounting, auditing, and finance. So today, I've turned my wealth of experience into practical materials, coaching sessions, and master classes like the ones you are currently attending as we speak. All right. So in this 2-day masterclass, I'm going to share with you, okay, the top and amazing secrets of this accounting industry that has remained untold by anyone until now. Okay, why this free 2 days masterclass? Why do you have to make this for free? Okay, so I sense that a lot of you might have this question burning in your mind, and just in a few minutes as well, I'm going to answer this. You see, when I qualified as a chartered accountant in 2019, I got an offer to work with an accounting firm, popularly known as audit firm, and a quick one. I really don't know who called these firms, okay, this company, I don't know who called them audit firms because they are accounting firms. The right name is accounting firms, okay? So the firm is located in Ikeja, Lagos State, Nigeria. So during my stay in this firm, I got exposed to a lot of business industries, and I mean a whole lot, okay? Ranging from banking, the fast consumer moving goods industry, the consulting industry, agriculture industry, aviation, security, entertainment, a whole number of them. Okay. And I discussed something interesting, and be with me here. What is that thing? One of the things that got about a over 100% of my attention is the fact that I discovered myself that many accountants, okay, cannot single-handedly prepare a complete IFRS-based financial statement from the scratch. Like, I mean this. A whole lot of accountants cannot prepare an IFRS-based financial statement. Okay, so before I continue, Mr. Michael David said the screen is not clear. If the screen is not clear, okay, so you want to adjust your resolution settings. You might click settings on your YouTube, then you see something like 480p, something 720p, something. So you want to put it on the higher, which I think the highest is 720 or thereabout. Okay, so once you put that, the screen is going to be clearer. All right, so I believe so. So as I was saying, I discovered that a whole lot of accountants, and I mean this, could not prepare a complete IFRS-based financial statement from the scratch. Okay, and this has nothing, I mean nothing to do with whether you're an ICA member or you're a fresh graduate or you have 100 years of experience. It has nothing to do with all of that. And the few ones, okay, that prepare something that we can say similar to financial statement will end up presenting a financial statement that contains a lot of errors, and they never get approved by the board. And I mean this, okay? Because I've worked with a whole number of accountants, accounting clerk, CFOs, financial controllers. Okay, I have a couple of them as my friend, and I can easily relate to the frustration that comes with um you spending your whole day and night, okay, trying to prepare financial statement for about 2 to 3 weeks. Like some people are already doing, a lot of people are trying to get at this is January 2024. So a lot of people are trying to get their financials for 2023 prepared and get presented for the purpose of approving the budget and all of that. And they keep on struggling with this. Okay, so what they get is go and work on this thing again, Mr. Man, and I need it on my table by 9 a.m. tomorrow morning. Imagine that coming from the chairman of your company, or the MD of your company, or the CEO of your company, or even your boss. What you have spent practically 2 to 3 weeks, day and night on, and then what you get is go and prepare this thing again. I mean, I can easily relate with the frustration because I have been there. Before I work as an accountant, before I joined this accounting firm, I've worked as accounting clerk, a boss staff. A number of my accounting experience before I dive into auditing, consulting, all of that fully. I've been an accountant, managing accounting, finance department, accounting department for schools and education sectors. Okay, so here is the thing: have you been in this mess before? Like, have you ever been in this situation? Yes, I can grab, and I understand that it can be annoying, it can be frustrating, and this made me discover that there were a whole lot of people behind, okay, who needed my help. And many of my colleagues with people that we started the 8 years program together that are still yet to qualify. So I made this a personal decision that I'm going to help every accountant, okay, that I come access to. I'm going to help them I reach out to. I'm going to help them with my mastermind session like this, with my courses, my books, and every other means I can. And I'm happy, and at the same time, I'm glad to let you know that this dream has started coming to pass. Okay, because we now have a community of accountants. I think we are over 300 as we speak. Okay, we are over 300 in the community. It's an exclusive community of accountants. Not every accountant you see out there are in this group. It's just for some highly selected people like you. So on this group, what do? We share ideas. We discuss at length. Sometimes we joke with ourselves. Life is not all about seriousness. So obviously, we share job updates, and we also host some free trainings every month. You might have seen the previous one that you made that we made earlier this year. I mean 2023 on my LinkedIn profile and many others. So now let's proceed to this masterclass. I want to make sure you are in the right place. If you are here, you should either be an accountant, or you are a finance professional, or a student of accounting, or finance student. If yes, let me welcome you again to this mastermind session. And I promise you are going to learn something amazing, something new, something important to you. And if you are not on the other side, please, I beg you, I'm practically kneeling down for you to leave this session, because this masterclass is not for you. Okay, with that said, let's hit it straight. I strongly recommend that you do away with all forms of distractions. I mean, anything that can distract you from whatever we are discussing on this class today, because I'm not sure if the recordings will be made available, although I have my team in checks, but I'm not sure if the recording is going to be available. The information I'm going to share with you on this call will change your life, and I mean it. So hear what some of my students and some of my friends are saying about me. So this is Ogefioluwa. She said, well, in this field, you are a special being. A special being is someone that is different from others, not just different, but able to solve a problem some people cannot solve. I'm saying this because the fact that you understand what you are doing and you are able to teach others is really great, because not everyone can do this. Well, for me, what makes you a special being is not just because you are intelligent, because there are other intelligent people out there, but the fact that you are able to teach others to understand. So this is another friend of mine. Her name is Biodo. Although Biodo is now a Mrs. She said, "Yeah, I'm an accounting guru. I'm serious because you are building that. That's what you are building yourself to be. I'm happy to see that you are achieving your dreams step by step. Because you do say it then that you want to be very good in this profession and that you have chosen, and I can see you are realizing it. So this is faith. Faith is also a missus. I have a couple of my friends that are married, my student married. So she said, "Dear sir, I want to be grateful to God for your inspirational role that you have played in my life. As my lecturer and mentor, you have made accounting profession so easy and interesting. Your knowledge, skills, and expertise in the accounting field are exceptional. And the enthusiasm you always display in sharing the skills and knowledge is quite admirable. Thank you, sir, for all you do. The accounting world is blessed to have you." Okay, so for the purpose of this masterclass, I'm going to review my entire secret of how I was able to move up the ladder faster in the accounting and finance industry, as I will be taking you through the step-by-step procedures on how you alone, okay, can single-handedly prepare a complete IFRS-based financial statement using only Microsoft Excel. In my previous classes with my students and community members, I shared a lot about myself with the intention of trying to get people to know me a little bit better. Okay. And in order to waste the most valuable asset we have as human, I'm going to tell you three important things I feel you might want to know about me. One, I am a qualified accountant with over 12 years of core experience in the accounting, auditing, and finance industry. So I'm not a baby in this industry any longer. Two, I recently authored a book titled Seven Simple Steps in Preparing Complete IFRS-based Financial Statements. And lastly, I've tutored over 200 students across the country, and I'm also the coordinator of one of the fastest growing accountant community. This is where I'm qualified to teach you this information. If you want to learn, probably want to know more about me, feel free to check me out on LinkedIn. Just a simple search of my name, Jamiu Fatimbo. My profile is going to pop up and you will get to read every single information you want to know about me. And that's it. So guys, step-by-step procedure for preparation of financial statement with Microsoft Excel. Before we dive in, let me quickly take you through what we are going to be learning in this masterclass. Okay? What we are going to be learning in this masterclass. One, I'm going to be trying as much as possible to go into detail so you can understand what we really mean by saying financial statements, which is what we are going to be discussing under the introduction. Two, I'm going to be talking about how you will understand the components and elements of financial statements. We are going to be looking at their meaning. We are going to be comparing them so you can have a clearer picture of what components are and what elements are. One. Two, you will also be able to differentiate clearly as well the difference between the two. Three, I'm going to be sharing you my procedures that you hardly see people talk about it. And I mean this. By the time we go deep into this session, you're going to see what I'm talking about here. Okay? So you hardly see people talking about these procedures in public. Four, I'm going to be showing you how you can prepare what we call extended trial balance and how we can prepare notes to the financial statement. And five, we're going to be discussing how you can extract a full financial statement from the notes to the account. All right. So let's go on, guys. What are financial statements? What do we call financial statement? Before we proceed in this class, I want you to have a background understanding of what is called financial statement, because if you don't understand what you want to prepare, then it becomes a problem for you to prepare it. As simple as that. So financial statements are a set of documents that are used to show the financial performance, the financial position, and cash flow movement of an organization. This definition is so basic, but a lot of people don't get to understand it. So the whole idea is financial statement is not just one document, as many of us think. Okay, it is not just a document, it is a combination of documents. Two or more documents makes up a financial statement. And what does it really shows? Our financial statements, or let me say, an organization financial statement is actually targeted to show three simple things. One, financial statement should show performance of an organization, should show the position of an organization, and to show the movement of cash, meaning where cash is coming from and where cash is going into. All right. So the major goal of the preparation of financial statements is to be able to provide information, okay, that are useful for decision making. Meaning, the information you are presenting your financial statement has to be useful for users to make decisions. And this information is quite useful in a number of different ways to different user groups or stakeholders. And we know when we say stakeholders, we are referring to accounting information users, and there are just two groups of them: internal and external. Internal are those within the organization, external are those that are not within. Example: shareholders, external; public, external; government, external; board of directors, they are internal; employees or staff of the company, they are also internal. All right. So moving on to the next one: understanding components and elements of financial statements. And let me say this again, I want you to pay close attention to me now. Okay. And as a matter of fact, because there's a big difference, okay, between what we call components and what we call elements of financial statement. There's a big difference between them. Guess what? Many people don't know this as well. So don't be too hard on yourself. Many people don't know. And I'm going to be explaining them in two simple terms or using a simple sentence. Components are what makes up the financial statement. Again, components are what makes up the financial statements, while elements are what can be found in each of the components. I'm not sure if you got that. Let me explain better. Component, remember earlier on that I said financial statements are sets of documents, which means one document does not make up a financial statement. It has to be a combination of two or more documents. So therefore, when we say component, we are now saying, okay, those combination of documents that makes up our financial statement are what we refer to as components. All right. And when it comes to elements, elements are what we can see, what can be found in each of these components. For a clearer picture, let's take component as, let's say we have bottles. Okay, let's say we have three bottles, the one we call bottles water or something. We have three cans. Okay, one of the bottle, okay, contain, let's say, water. Okay, one of the bottle contains water. The second bottle contains, let's say, sand, any type of sand basically. The third bottle contains, let's say, stone, maybe some light stone or something like that. So combination of bottle 1, 2, and 3 is what we call components. So when we combine bottle A, or when we combine bottle 1, bottle 2, and bottle 3 together, they give us what we call component of financial statements combined together. So bottle 1 is a component on its own. Bottle 2, the second bottle, is another component on its own. Bottle 3 is another component on its own. When we combine these three bottles together, they become financial statements. Are we there? Remember, these bottles, they have something in them. So we say bottle 1 contains water, bottle 2 contains sand, bottle 3 contains some light stones, maybe small stones. So element now becomes water in bottle 1. So when we check bottle 1, we are saying water, which means water is an element of financial statements. Remember, bottle 1 is a component. Water is found in bottle 1. So which makes water a component, an element of financial statements, while bottle 1 that carries the water is a component. All right. Bottle 2, the same thing. Bottle 2 that carries sand becomes element, bottle 2 becomes a component. So components are what makes up financial statements, while elements are what can be found in each of these components. So I hope you got that. Let me know if you got that in the comment section. Let me know if you understand that in the comment section. And quick one, if you have any question, make sure you jot them down somewhere. So after the session, I'm going to open the floor for question and answer. Maybe 10 to like 15 minutes session and answer, question and answer session, so we can have a clearer picture of all of this. Okay. So I hope you got the explanation I gave on components and elements. So let's now look at what do they really mean, because the major component of financial statement are: 1, statement of financial position; statement of profit or loss and other comprehensive income, which can also be called income statement. Number 3, we have statement of changes in equity. Number 4, we have statement of cash flows. Number 5, we have notes to the financial statement and other disclosures. Number 6, we have value-added statements. This is not required by IFRS. Number 7, we have 5-year financial summary. This is also not required by IFRS. And number 8, we have abridged financial statements. Okay, so let me quickly take us back on some few number of years. When it comes to IFRS simply means International Financial Reporting Standard. Okay, that is the meaning of IFRS, International Financial Reporting Standard. And before we adopted IFRS in Nigeria, okay, because IFRS did not just jumped and enter Nigeria when it first started. No, IFRS has started long time before we adopted it in Nigeria. Do you get that point now? So before, when we adopted IFRS in Nigeria, January 1st, 2012, that's when we adopted IFRS in Nigeria. But there's something interesting here. Okay, before we adopted IFRS in Nigeria, what we were using before was something called NGAP. Okay, let me put that on the screen. Before we adopted IFRS, what we were using before in Nigeria was called NGAP. NGAP simply means Nigeria. Jot this down, please, guys. Jot this down. Make sure you put this down. Make sure you put this down. Don't let this go. NGAP means Nigeria Generally Accepted Accounting Principles. Again, before we start using IFRS in Nigeria, what we were using before IFRS was NGAP, which means Nigeria Generally Accepted Accounting Principles. So it is more like IFRS, but it is local standard. Do you get it? Is our local standard. So in NGAP, okay, what we have is called SAS, which is called Statement of Accounting Standard. So instead of we having IFRS, IAS, IFRS like that, we have SAS. So we have SAS1, SAS2, the same way we have IFRS1, the same way we have IAS1, IAS2, like that. So we have SAS being our local standard. So according to SAS1, SAS1, that talks about preparation of financial statements, we have balance sheets as component also. The components that are required by NGAP is what I'm talking about now. So this is off the script. This is off my slide. I didn't plan on sharing this with you, but then I feel let me share more details. So that's why I have to jot this down. So before we start using IFRS again, we're using NGAP that contains our SARS. So according to SCS1, we have component of financial statements. We have balance sheet, we have profit or loss account, we have cash flow statement. Take note, balance sheet, profit or loss account, cash flow statement, note to the account, value added statement, and 5-year financial summary. That's what we have in our local gap. Okay, so when we adopted IFRS, we had no choice. 2012, we had no choice than to abolish totally our local standard. So we had to drop our local standard and adopt IFRS, the use of IFRS fully. So therefore, according to IAS1, which means International Accounting Standard 1, that standard talks about, the title of the standard is Preparation and Presentation of Financial Statement, meaning how do we prepare and present an IFRS compliant financial statement, which is the core goal of this class. How do we prepare and present it correctly? Okay, so according to that standard, the standard allows, if you look at components 1 to 5, component 1 to 5 is what the standard basically required. However, under number 5, that says notes to the financial statements and other disclosures. Okay, the standard says that we should include, I want to pay attention to this. IS1 requires that we should include, okay, as part of component of financial statements, we should include every necessary information that are going to be useful for our users' decision making. Which means that if I think, okay, the kind of company I'm working on, the kind of company I own, my users of financial statements will be interested in seeing clearly how much was spent on transportation. I have to declare a reasonable information on transportation. As simple as that. So for that reason, we believe in Nigeria that value-added statement is going to be providing another set of value, another set of information, another set of data analysis, okay, about the company that talks around how much more value was added during the year. So there's no problem presenting what the IFRS does not require. What becomes a problem, or what is going to be a problem, is when you did not comply with what IFRS require. So presenting value-added statement, presenting 5-year financial summary is an added information according to IAS1. Okay, so now we understand what component is. So let's look at what the elements are. We have 5 major elements of financial statements. We have assets, we have liabilities, we have owner's equity, sometimes called capital or equity for short. We have expenses, then we have income. And I want you to understand that these are like the main categories, okay? Each of these items have their subcategory. And what do I mean? All I'm saying right here on this call now is that assets is a major class. There are some other information under asset that we can say they are subclasses. The same for liabilities, the same for equity, expenses, and incomes. So, for example, now assets. According to IS1 definition, that's our goal. According to IS1, IS1 says assets are properties that are, controlled by the organization. The economic benefits will flow through the organization. Of course, I'm trying to give you what IS1 define asset to be. IS1 says, 1, for you to say something is an asset, you have to have control over that thing. 2, it must have occurred as a result of past events, meaning you might have exchanged it for something in the past, you might have paid for it in the past, you might have acquired it in the past. However, it must be with you, or it must have been in your record as a result of past events. 3, you must be using the assets. Okay. 4, is the economic benefit arising from the use of the assets must flow to you. And IS1 does not tell us what a non-current asset is. But IS1 surely gives us the definition of current assets. Current assets are those assets with lifespan of a year or less. So which means that any asset with useful life of more than a year becomes a non-current asset. For that reason, we have two subcategories of assets: non-current assets and current assets. Okay, I believe I'm making sense there. So which means that a non-current asset is any item of asset with useful life of more than 1 year. Example of them: motor vehicle, land and building, premises, equipment, furniture and fittings, name them. Any asset with useful life of more than 1 year becomes non-current asset. And according to our local standard, SAS, we call this fixed asset before. So when we adopted IFRS said nothing like fixed assets. We change the name to non-current asset. The same way we change balance sheets to statement of financial position. Simple. All right. So liabilities are obligations or charges against the assets. And there are two categories of liabilities as well. We have non-current and current, although sometimes we usually have contingents. Okay, so what do we mean by non-current? Just like we have current assets and non-current assets. So we have non-current liability to be liabilities that the repayment period, or we say liabilities which their repayable period is more than a year. So if I have any liability that, okay, I can settle this liability for over a period of, let's say, 1.5 years, that liability becomes a non-current liability. But if it is less than a year, or if it is just 1 year, it becomes a current. Owner's equity is owner's interest in the business, and it can be majorly divided into share capital and earnings, or share capital and accumulated losses. Reserve can be added under accumulated loss and all of that. Expenses, you know what expenses are. So this is not a basic class. You know what expenses are, but we're talking about the subcategories now. We have about 5 subcategories of expense, 5 of them. One, we have one we call direct expense, or you call them direct costs. 2, we have personnel costs. 3, we have administrative and general expenses. 4, we have selling and distribution expense. 5, we have finance expenses. What do all of these things, all these subcategories, what do they mean? Because there is accounting standard that we are following. So you should not prepare something that is against accounting standard. Imagine an accountant trying to prepare a financial statement, then the accountant mistakenly charge something that's supposed to appear on that balance sheet into the profit or loss. The financial statement has become rubbish just like that. That's why I said earlier on that many people could not prepare IFRS-based financial statements, and I mean that. You can just check it out randomly. You can check it out. Ask around. Any accountant that you can use the Google link and put out something. People will be more fair when you are not confronting them. Just ask them a random question. Can you prepare a complete IFRS-based financial statement without the use of any software from yourself alone? You see responses. These are what we're talking about here. These are what I've seen over the last 12 years. I've seen this play out. And it's still playing out because, I still work with accounting firms. That people call these firms. I still work with all these firms. And I see all of this. And it becomes a problem to me. I feel like, okay, let's see if we can work around this. Okay, that's one of the goals of this masterclass. So, for expense, I said we have direct cost. Direct cost, listen to these guys. Direct costs are any expenses that are directly for the purpose of revenue generating activities. Okay, let me give a perfect example. Let's imagine that, okay, I run a school. Okay, let's say I run a secondary school, and I have, like, let's say 15 teachers, and I have over 100 students in the school. So the salary I paid to the teachers qualify as direct cost. Why? Because without teachers, there will be no one to teach my students after giving them admission. If I didn't teach my students, there is no way I can ask for school fees payment from their parents or their guardians. Simple. So which means that paying salary is directly attributable to my revenue generating activity. If I don't pay salary to my teachers, teachers will not work. And when they don't work, I don't get to make money, school fees. Simple. Because I am established to run that kind of business. But for gateman, for driver, for cleaner, I can actually charge their salary into expenses, other expenses, not direct cost. That's a clear difference. So direct costs are those costs that you have incurred for the purpose of, or that is directly attributable to your primary objective of running that business. Clear? Okay. So the direct cost can vary from business to business. For example, now in my firm, in my audit firm, I don't own an audit firm, I work with an audit firm. Okay. So in the audit firm I work, what the salary they paid me as an audit staff is a direct cost. The salary they pay the cleaner, the salary they pay driver is an admin expense, because I am directly involved in revenue generating activities. So if in your company, let's say you run an import and export business, whatever you pay to get your business running, not just ordinary expenses, whatever cost you have to pay to keep the business running, is an example of direct cost. So moving on now, I hope you get the direct cost now, because many accountants cannot separate what direct cost is and what is not direct cost, and it's a problem, because if you over recognize your direct cost, you are under recognizing your gross profit. If you recognize a lower direct cost, you are overstating your gross profit, and you know what understates profit and overstating profit will mean in your records. That's why you have to get a clear picture. The second class of expense is personnel cost. This is where we show all salaries that are not directly direct cost, meaning salary of driver, other staffs, cleaner, secretary, anything, name it. That's what we put there. So most company, if your activity is not directly on revenue generating action, then your salary fall under personnel cost. The third type of expense. Remember I said we have direct cost, we have personnel cost, we have admin and general expenses, we have selling and distribution expenses, and we have finance cost. So I've explained direct cost, I've explained personnel cost. Moving on to selling and distribution. These are expenses that are directly involved, okay, in selling more of our goods. This is where you see something like marketing expense, where you see discount allow, advertising, sales promotion, all of that. It fall under selling and distribution. Do not make mistake of saying that selling and distribution and direct cost are the same. Get the clear picture. Okay. So the next one is administrative and general expense. Every other expenses like electricity, rent, posting and stationery, we put them under admin and general expense. Then the last one is finance expense. Expenses that basically relate to we getting incomes, getting funds. If I have to borrow money from the bank manager will charge me interest. I pay interest on loan. Interest on loan fall under finance expense or finance cost. If I have the venture that the venture is like a loan. If I have the venture that I'm paying interest on the venture fall under finance cost. It's not an admin expense, it's not direct cost, it's not selling and distribution, it's a finance expense. A quick one, most companies combine all of this together and call them admin and general expenses. For me, I think that is wrong. Or what do you think? I feel it's wrong. So moving on now, the last item of financial statement is incomes. And we have just two categories of incomes. We have revenue and we have other incomes. Revenue are incomes from the primary activity of the company. For my own example, my school example, whatever money I'm making, whatever school fees I'm collecting, only school fees becomes income. If I had to sell textbooks, if I had to, if I had to do extra classes and I'm getting paid directly to the school account, such fall under other income because I'm not established to be selling textbooks. I'm not established to give extra classes though. Although I do it because it's fall in my line of business. So whatever income I'm making from there fall under my other income. If I had to sell one of the old bus that belongs to the school, whatever income I'm making from selling the old bus that belongs to the school fall under other incomes. Okay, so my major goal for you actually in this class is I wanted to show you how to prepare financial statements and not just tell you. So for this reason, I won't be able to go deeper on all of these elements. There are much of them going deeper, series of examples on examples, but I won't be able to go deeper on component and element other than this. So we are proceeding to our Excel sheets. Okay, I'm proceeding to Excel sheets so I can show you what financial statements really looks like. I'm preparing it. What does it look like? And I want to show you the framework. Just before we proceed, okay, I want you to pay attention. I mean, if you have not been paying attention since we started this call, I'm begging you now. I'm begging you, please, and please, and please, and please. I want you, okay, to pay close attention to this because I'm about to review how the Excel sheet are going to work together in order for us to have a complete IFRS-based financial statement. Okay, so I want you to take a look at this. Take 1 minute and look at this chart. Just 1 minute and comment if you are still following. Let me know if you are still following. Take 1 minute to look at the chart. Comment if you are still following. If I want to screenshot this chart, you want to quickly jot it down somewhere. Anyhow, just take a look at it. Great. Mr. Oluwole says never feeling. Yes, it's totally wrong. Thank you. Thank you for that. Like, it's something no one should do. But when I see people do this, I feel like, come on, where did you get trained as an accountant? Who trained you? Who certified you to be an accountant? But then what can I do? It's like it's not something anyone should do. I agree on that with you, Mr. Oluwole Sunday. Mr. Oluwole Samuel. All right. Okay, so Sarah, if you are not seeing the screen clearly, you might want to adjust your resolutions, your screen resolution settings. Go to your YouTube settings. You want to look for resolution. I don't know what they call it, but I know it's resolution settings. Ayomide, okay, you also do this. Go to your YouTube settings, find your resolutions, and then put it on. I think 720p is the highest. 720p is the highest. Okay, so guys, look at this chart again before we move on because I'm going to be showing you something amazing, something most accounting firm will not want to show you. Like my boss, like the guy that is paying me, must not know that I'm sharing this secret with you, honestly. But there is no account law, there is no law that says I should not share this with you. Do you get it? So I'm trying to help you. So take this class seriously. Okay, so you may not have a full understanding of what the diagram entails. Just look at it, put it in your mind and know there is something like that. But let's proceed to the Excel. So you can see for yourself what I call the framework of financial statement. By the way, put up your comments, put up the comments. Let me know if you are enjoying this class. If you are following, let me know, as I'm going to be sharing my LZ screen now. Let me know if you are following. I'm very sorry the video will not be available for download. The video won't be available for download. Yeah. Okay, so use the chat bar. Let me know if you are still following. Let me know how the class is going. And also confirm if you can see my screen. Yeah, the slide is nothing that you actually need. Is the personal resources. The workbook as well. Maybe the workbook maybe somewhere tomorrow. So comment if you can see my screen. Comment if you can see my screen. All right, Mr. Olupo Steven said he's following me bumper to bumper. Nice one. I think there's a song like that. Is it the band or who is this guy? I don't know who owns that song. Make it follow me bumper to bumper. I can't remember. It's an old song. I love listening to old songs these days. It just brings up something. I feel like this new Kiss Daniel or that. Just singing rubbish. But guys, confirm that you can see my Excel screen. Yeah, we don't have template to download for now. Yeah, thank you, Mr. Saufik. Wandiko. Yeah, bumper to bumper. Okay, I'm also said the screen is very clear. Is it very clear or not very clear? If your screen is not clear, then you want to adjust your sticker. You need to adjust your settings. I don't know, maybe your device or something is not making you see the settings. I don't know. But then if you adjust your settings, obviously we're gonna have it. You're gonna see the screen. Others can see it, so your case shouldn't be exceptional. All right. So guys, all right. So Adex said so clear. Gist TV. I hope I don't see Gist Lover. Yo, I better go. All right. So guys, I want you to look at something here. This is like the what was it called? This is like the front page. So when you open a financial statement prepared very well, you're going to see something like this, the front cover. Then you see this, the table of contents. Okay, you see table of content like this. Then you see corporate information, something like this. You see financial highlights, something like this. Then you see a number of things. But then I want to show you something amazing. I want to show you how this actually came about. The bag work view. When you are cooking a pot, when you are cooking soup, I don't get to cook. When you want to cook a soup, the whole background works look, untidy, everything just scattered, the way we mix everything together. But when the food is completely done, you get to see the beauty of cooking. Something like this is what we have here. So let's go back to something amazing. Remember the chart I showed you, starting from trial balance to extended trial balance to notes to the account, then to the individual surface of the financial statement. So this is what trial balance look like. So the first thing you want to do if you are preparing financial statements from the scratch using Excel, okay, is to get your trial balance intact. And let me quickly say this. This trial balance I'm looking at is just hypothetical figure, meaning it does not show the true picture of any organization. All of these figures, I just created them somewhere. You might see mistakes somewhere. They are not just true. Something I just came up with some new figures just for me to show you, because to me, it doesn't make any sense for me to say, I want to show you how to prepare IFRS financial statement, and all I could do was just explaining with mouth. I just came up with this Excel template and all of that. So although it's my personal resources and I can decide to share or not share, okay, depending on. But then tomorrow is day 2. So this is the trial balance. You want to confirm you want to do 2 jobs on this trial balance. Take note of these guys. Just 2 tasks on this trial balance. 1, you want to confirm whether this trial balance is accurate. And what do I mean? When we are preparing a trial balance, we prepare a trial balance with a rule known as the clip. Okay, that's the rule of preparing trial balance, the clip. And what does this declip mean? It means debit all expenses. Remember I said we have a lot of expenses. We have different categories of them. So all of them, debit them into the trial balance. assets, debit them. Credit, liabilities, incomes, and provisions. So that is the principle of that's the full meaning of the clip. I'm taking it again. Debit all expenses and assets. Credit, liabilities, incomes, and then provision. That is the principle of the clip. So when you are preparing your Excel trial balance, you want to ensure that your declip rule is intact. That's the first task. And what do I mean? You want to check every item on your trial balance. Make sure the item appearing on the debit column are expense and assets, while the one appearing on the credit column are incomes, liabilities, and provision. Task 1. Task 2 is you want to confirm or probably check whether this your trial balance agree or it does not agree. Because if you use a trial balance that do not agree, you're going to have a problem preparing your financial statement. Just like your two primary job. The clip rule must be intact and your trial balance must agree. And what do I mean by agree? The debit column of the trial balance must equal to the credit column. Something like this. If you look at this my trial balance, you can see that the debit column is the same as the credit column, and you want to achieve something like that. Then after trial balance, boom, the master sheet, extended trial balance, popularly known as ETB. That's the full meaning, extended trial balance. For short, ETB. This is a code. Come closer. This is a code that many people do not want you to know. And even me, before I joined the accounting industry, I did not get to see this until I joined. So this is the secret of accounting that many don't want you to get. Trust me, this is the truth. So this is the ETB. And honestly, you should start sharing this with people. Many people might not even believe that it's actually possible. Like I remember before I started doing this masterclass, I did a random survey, and I got a number of people telling me that no, it's not possible to prepare financials made from Excel. Why? How? IFRS financials made from Excel. Damn, it's not possible. I even had a number of CFO arguing with me that no, what we can do is just to get the trial balance, prepare some profit or loss, and then put some assets together. The IFRS financial statements, no, it's not possible. But when I prepare this and show them, they'll be like, wow. But I didn't get to share it with them. Obviously, I will not share my personal resource. So this essential trial balance is the main thing. Okay, and let me zoom it out so you can have a full picture of what it means. So this is how it appears. It contains 5 trial balances, and that is why we call it extended. It's not a magic name. It is simply called extended trial balance because we are having multiple trial balances on it. Simple. Extended trial balance means multiple trial balance. So the ETB is a very important page or is very important knowledge that you must have. I mean, when you are saying that you want to prepare a complete IFRS-based financial statement from the scratch using Microsoft Excel, you want to ensure that you have over 90% knowledge, if not 100, of the extended trial balance preparation. You want to know how you can prepare a good ETB. And it's very simple if you follow me in this masterclass, because I'm going to share every tiny detail with you. Okay, so we have 5 trial balances, as I said. We have the main trial balance, we have the transactional journal, we have the final trial balance, we have the statement of profit or loss in form of trial balance, they have the statement of financial position in form of trial balance. Okay, ignore the figures. I'm going to share that with you in a bit. So after this is the journal page. Remember our table, the table I showed you before we move over to Excel. I said the first thing we want to work on is our trial balance. After trial balance is our extended trial balance. After our extended trial balance, we want to go over to the notes. And we have 2 categories of notes. Jot this down. We have qualitative notes and we have quantitative notes. Qualitative notes are those ones that just contain story. I call them story because they don't contain figures. They are just accounting disclosures, policy, here and the information about the company, how the company recognize this, what is the company stand on this, all of that. We just call them accounting policy, but they are part of the note. So our note starts from somewhere here. Look at this note 1. Okay, it all starts from here. So all of these that you are saying, they are notes, the accounting policies, notes, accounting policies, information like that. All of these are saying they are notes. Then it comes down here too. This is also the part of the qualitative notes to the financial statement. Then boom, on this page we have the quantitative notes, our notes that carries information, figures, data. Do you get it now? So this. So as you can see, this one that carries figure. That's why we call them quantitative. We can quantify them with material figures. So as you can see, they are all quantitative, and it basically contains every tiny information we have on our financial statement. So these are the notes. This is also notes. Then this is the value added statements. Okay. So this task computation. Task computation is not within the scope of this master class. Oh, this I open a template of my paid session. So after you have set up the new basic, but that's how it works. From trial balance, we use trial balance to set up our extended trial balance. We use our extended trial balance to set up the notes to the account. Then from notes to the account, we move on to individual components. As you can see, this is how the statement of financial position looks like. This is the statement of profit or loss. This, okay? This is a statement of changes in equity. As you can see, it carries share capital, retained earnings. If you look at the statement of financial position, you notice that it shows the two broad categories of our assets: non-current assets and then current assets. This is our equity. This is a liability. Although here I have only current liability. Okay, so this is statement of profit or loss that shows, look at the categories of expenses. We have revenue, other income, the two categories of incomes. We have direct cost, admin expenses, income tax expense. The categories of expenses that I explained, although we don't have personnel cost on this. Okay, so this is statement of changes in equity. This is how it looks like. Okay, this page, this is how it looks like. Then this is the statement of cash flows. I don't want to show you the framework here, so we're rounding up soon. This statement of cash flows, and remember, this is where the accounting was started from that I showed you earlier. So we set up the trial balance. We use our trial balance to set up the notes to the account. We use our notes to the account to set up the individual component like statement of financial position paid, statement of profit or loss paid, statement of changes in equity, statement of cash flow, and all of that. Okay? So the next one now is this. All of these are just other information. The major part is how we use trial balance to set up ATB, how we use ETB to set up notes, how we use notes to set up our statement of financial position. And to round up, for you to get all of these notes to the account, let me share you one secret that I don't get to tell all my clients. All of these qualitative notes, no one came up with all of this from their head. Nobody. I'm telling you for a fact. Nobody came up with all of this from their head. We got them from a free website. And what's the title of the website? iasplus.com. So when you go to the website, you look for, okay, I'm looking for what I'm to disclose under this standard, maybe IS 16, PP for example. The standard will tell you everything you want to disclose. You want to copy that notes, you want to work on them, bring them over to your Excel. Boom, that's it. No one came up with all of this from their head. Not even me. Can just make sure it fits into our business. But then all of this from the scratch, no one. Okay, so the website again, iasplus.com. Okay, that's the name of the website. So guys, once we are done with that, then boom, we set up the notes, financial statements, and all of that. So guys, we have come to the end of the session of day one. So I can see some questions and flying around in my comment section. So guys, question and answer, we have come to the end of the day one of this masterclass. Day two is tomorrow. Before I move over to day two, you can always drop your question here in the chat box or on the WhatsApp group. I'm also checking the WhatsApp now. You can always drop your comments in there. I'm checking out. So question, guys. Question. Okay, I think I have some question hanging around already. Gideon Adiyemi said, someone help me with the meaning of P in the clip. Okay, provisions. Okay, someone answered that already. I can see people are following, and that's amazing. That's amazing. Okay. Olu Positive said, what is the difference between extended trial balance and trial balance? Okay, trial balance is one trial balance. Okay, trial balance is just one. Extended trial balance is a combination of two or more trial balances. That's the difference. So if we have just one trial balance, it's called trial balance, and the page is called trial balance. But the extended trial balance carry different trial balances. We can have our journal in form of trial balance. We can have the main trial balance. So when we combine our main trial balance to our final trial balance, statement of profit or loss trial balance, statement of financial position trial balance, we have then what we call extended trial balance. Stephen, I hope I've answered the question. I did not see fixed asset register. Yeah, fixed asset register is what we call notes to the account. It's there in the notes. Okay, thank you, Oluwole Samuel. Ades Vicar said, is note to the account the same as qualitative note and quantitative? Yes. Note to the account is like broad. So under note to the account, we have quantitative notes and qualitative notes. The name of the website is iasplus.com. Let me show you how it looks. I think it was the site. The site was actually hosted by, is it Deloitte or KPMG? Hold on, hang on a minute. I think the site is hosted by Deloitte, if I'm not mistaken. Yeah, Deloitte. So I'm on the website now. Let me show you how it looks like, so I can show you how to get the notes. Okay, so I'm going to attend to that question. Let me quickly show you the site I'm talking about. Yeah, the site is hosted by Deloitte. So as you can see, so if you want to copy if you are looking for your accounting standard notes now, you want to come here to standard. Okay, so these are all the standard. As you can see, remember I said IFRS has started long time ago before we adopted them in Nigeria. These are 2008 standard, 2004 standard. There is even 1976 standard, 1992. So Nigeria is just behind. 1983 standard, IAS 26. Although many of these standards they've actually been replaced, worked on. So basically, let's say I'm looking for information around, okay, I've seen PP. Let's say I'm looking for information what I'm to disclose on my PP. I just come down here, as you can see all of this. So this is recognition. This is scope. You can also use this to prepare for your account exams. If you don't have materials to study, you can also use this because they update this regularly. So this is recognition. This is initial measurement. This is subsequent recognition, evaluation method. So you just want to come here, copy, put them in your Excel, and then you do some little work on them so they can suit your company. So that's how we have it for every other asset, every other elements, every other standard. Okay, so more questions, guys, more questions, so we can round up. We spent over an hour on this call. Okay, I can see what's the essence of statement of change in equity? Good question. The major goal of preparing statement of changes in equity is to show that part of equity in the balance sheet, to show the interest of the owners of the company in the business. You get it now? So I hope I've answered your question. Gist TV, for a school like you, use an example, how do you quantify their share capital? You might want to do, statement of affairs approach if the owner of the business if they are not registered under CAC, because if they are registered under CAC, you obviously see the share capital from their memorandum of association and articles of association. But if they are not registered, you might want to do opening asset and opening liability to get the opening capital. Or move over to the owner, me that own the school, come and meet me, ask me direct question. Oga founder, oga proprietor, oga principal, anything you call them, how much is your capital in this school? There are chances that they may not have full information, shey you get, but then they will have one or two things to tell you. Okay, when I started this year, I have this amount. If they don't want to recognize that amount that they are telling you as capital, they want to do opening and liability, put a figure there, and every other excess figure, you take it to retain earning. Simple. Do you get that question? I think I've answered your question, Gist TV. Okay, so Samuel Dazum said, I don't get what this me is. Me highlights on changes in equity, please. So changes in equity is usually show movement in our equity. What has happened, what changes, and all of that. That's what changes in equity is. Yeah, someone asked on the group that can we get that template? Yeah, maybe tomorrow we are going to share. I'm going to give access to get a template, but I'm not certain. Yes, but my team are already in checks. Okay. Yeah, so basically, changes in equity is used to show the owner's interest in the business. That's what it means. And it depends on what they have. We can have share capital, we can have retained earnings, we can have reserve, evaluation, surplus, a number of things. That's what we have there. Can reach you on that? I didn't get this question, Steve. I don't get what you're talking. Are you saying you want to reach me on WhatsApp number? Yes, you can reach. You can drop question for me on the group. My team are in the group with you. If my team did not get to reply, obviously you get my response. It might just take some time, but you definitely get my response. Okay, so how do I prepare statement of change in equity, and also what are the components and elements containing there? You need to get this straight. Statement of change in equity is a component. So you cannot have a component in components. What you can have is element of statement of changes in equity. Okay, that's what we can have. And what do I mean? Part of the element of assets, part of the element of financial element is asset, liability, incomes, equity, like that, expenses, then revenue, all those things. One of the components of financial element is statement of change in equity. And when you check statement of change in equity, you will see equity as the element. In the same way, when you check statement of profit or loss, you will see revenue and expenses. Do you get it now? So when you are preparing statement of changes in equity, you want to look at what makes up your equity. That's the idea. And equity usually makes up of share capital, retained earning, what again? If they don't have retained, they will have accumulated losses. Then what again? Reserve, share premium, revaluation surplus, a number of that. So when you have all of that, you want to put them in your equity. Simple. Gist TV, hope you will throw more light on tax reports. Well, tax report is not within the context of this masterclass. As you can see, when I share the outline, tax report is not there. Is one of my paid class. You might want to proceed to paying for it. Maybe tomorrow you might even get the chance to get the tax report for free. That's one funny thing about me. I can change my mind, just talk to my team. But then I've done it a number of times, and then they are not in charge. My team are not in control because they fix all of these links. They register many of you people, so they are basically in charge. Father Jabenu said, please, I would like to get the template. Yeah, like I said, and let me restate. Getting the template is my personal resources, and maybe tomorrow I will talk to my team if you can share it with you. Is that fine? Could you please share the website of where we could get that? You can write down the website, iasplus.com. That's the name of the website. iasplus.com. That's the name of the website. iasplus.com. Let me see if I can put it on the screen. iasplus.com. If you put /standard, it's going to take you to standard page straight. So it's on your screen. You will talk to my team tomorrow. I like your energy, Steven. Yes, I like your energy. Okay, so guys, any other question? We are rounding up. Oh man, actually I have a session in the next 15 minutes, so I gotta go. I have a session by 9:30. I got to go, guys. Thank you for having me today. Tomorrow is the day 2, and tomorrow we are going to go in straight into practical. Make sure you don't miss tomorrow's class, and I mean it. Today is just the tip of the iceberg, as you can see. Just tip. Many more is still coming. I'm going to share with you how we can prepare started trial tomorrow. Let's keep the energy till tomorrow. If you have any question, guys, make sure you share it. You drop it on the group. I'll get to reply. My team is there with you. Thank you, guys. We'll see you tomorrow. Cheers. Bye. Enjoy your night. And make sure you enjoy your Friday. Thank God it's Friday. Woo! Bye, guys.